All right, we're back for Wednesday, January 26th. After what we talked about last week, where we got rejected by the 20-day moving average, we had 3-4 nice days. For BTC zoom in here, we had 3-4 nice days here, right? This is the 26th, 25th, 24th, 23rd, and 22nd, right? So it's the weekend. Monday, Tuesday, Wednesday. So we have a nice little bounce here. Maybe find a bottom. We talked about this is where we drew our trend line last time, all the way back to the original two all-time highs ago, which would be the 20K, right? We'll go all the way out here to this one, right? Back in 2000, excuse me, 2017. And I had two drawn there, remember? I had one go this way, which I think it respected a little more cleanly than it did when we drew from here. But nonetheless, let's not worry about that today. But we did get a bounce there. So why did we get a bounce there? I don't know. Maybe that's where traders are looking, right? Maybe other people draw the same trend line. A decent enough drop on the daily. And then I think on the S&P, so remember we don't have weekends on the S&P. So we only have Tuesday and Monday. And this was last Friday. So we only have two candles to play with, whereas Bitcoin continues to trade on the weekend. So in my opinion, I think we're just tracing the S&P still. I think Bitcoin moved up, even if you get into the hourly yesterday. The problem is this happened at night, right? Right now we're about 4.5 hours from opening in New York. So, this happened at night. And I really do think it's just shadowing the S&P. So if we take this out of here, let me look at what the S&P did as well. Right, it looks very eerily similar, right? So we have our drop, and that's playing. We had a nice run up. The S&P was able to make ground here at 4,200, which on the weekly, that is our 20. So our 200, our 99, our 99 there, and our 50. So 4,400 on that weekly. We're right on the 50-day weekly. A lot of uncertainty in this candle right here, that's for sure. There we go again, right? More clear. We rebounded, but this is just uncertainty yesterday, Tuesday. I thought the Fed announcement was supposed to be yesterday, but I think it either moved or I had the date wrong, but I believe it's absolutely today, which will be at the end of trading hours. So if we could jump in time, it's 4.5 hours or 3.5 hours. 7, 8, 9, 10, 11, 4.5 hours plus 8, 12.5 hours. So if we jump into Bitcoin, what Bitcoin could be in 12.5 hours? I'm going to guess one. So we would be looking at 1, 2, 1, 2, 3, 4. That puts that about 16 hours. So if the market opens flat, I would imagine that we take our next shot down. I mean, remember, in a bearish market, the 20-day moving average acts as resistance often. All right, so we have a here, the 20-day pushing down price. Obviously not here, but again here, right? Zoom in here, and then following the average down, right? We can see this in retrospect. I mean, it's hard to see when it's playing out in time, right? And if you don't have any of this information here, I mean, especially when it gets to right here, you really don't know. But if you feel that bearish sentiment, then this was the perfect place once it rose up above there, and you know this is fake. This is a bear trap. You know, you shorted here 43 down to 33, and you made a lot of money. That's a good trade. But how often can you make that trade, right? Because here we're breaking out. If you made that same trade with that same logic, you know, you're not doing too well. Or sometimes you just got to buckle in, right? So, what I wanted to look at today was one thing is when you add something to TradingView, right? Like you can put Bitcoin in here. You know, if you type in Bitcoin, right? So there, that's what I looked at before. So it's here. When you look at the price, that's only the price on Binance. So that's what the price was whenever Binance started. But we don't want that. When we want to look at the entire history of Bitcoin, we want to look at the index. So if you just type in Bitcoin, hit crypto, and scroll down, you'll see one that says index, and it's the TradingView logos there. So it's Bitcoin all-time history index. So it's from day one it traded. Wherever that was, that information is there. Okay, so we add that. And the reason why I want to do this today is I want to switch over and show you something just long term. We're talking about the short term a lot here. Let's get these lines out of here. Forget the short term for a minute. Let's get into the real long term stuff. And one of those things is, give me a second. Oh, we're at logarithmic. Okay. I'm having trouble here. Always. All right, so I wanted to bring up the long-term chart for Bitcoin. We're going all the way back to 2010. Excuse me. And yeah. So I want to talk about the long-term chart for Bitcoin. We can take it all the way back to 2010. All right, we can adjust our chart here. There we go. And so yeah, 2010, we got information for that. Remember, that's the when you put Bitcoin as index in TradingView, you're gonna get that. It'll be right there. So you can find it, all-time history, right? It's the entire market ever of all exchanges, right? So, just a long-term chart, and you can bring this up on a weekly. Weekly is the best time frame to look at it. Daily gets a bit too, it's actually pretty hard to get it all on one chart in the daily. So, if you bring it to the weekly, I want to show you what's called a give me a second. Yeah, there we go. This is called a Gaussian channel. Gaussian channel. And you can just find that in your indicators. Gaussian channel. And there's other ones to play with. I'm just using this one. So anyways, the Gaussian channel, like I said, on the weekly, on the daily, it gets messy. So if we look back and from 2010 to 2022, we got a nice 10-year, 12-year period to look at, and this channel which is just a momentum indicator. If we look at when price was inside this channel, so we got 1, 2, 3, and 4, and last but not least, right now is 5. So anytime we take a look at one of these channels closely. So the channel dropped into the channel after an all-time high of $31. It dropped into the channel, and this is basically the beginning of the first ever bear market, right? All-time high of 32, 31, and low of $2. Wouldn't it be nice? So what's intriguing about this is anytime, basically, if you decided to buy inside of the channel at 7.80 down to $2, after leaving the channel, you had more than July of 2010, almost a year and a half to sell for profit, right? So you had a chance to buy it in the channel and then be able to sell it for a profit. So then we go to the next run up, right? We consider the next bull run, right? The next bull run here. There was your optimal chance for buying, which was several months. And even though $2 up to 7, right? Even that, I mean, $2 to almost $7 is 300% there, but that was still a good place to buy because we were still in the channel and it ended up trading above it. This is in retrospect, sure, but the next uh the next run was the real bull run. And then we go to the peak in December of 2013. We hit 1200, and then it traded back into the channel, below the channel. Where I mean, still, I mean, I know it hurts here, right? When it's at, you know, $470 you buy, and it's down to 173. But all of that price action still would have paid off in the long term for the next bull run when we traded outside of the channel. Then, so you get into the next run. It's the most notable, or when most people became aware of Bitcoin, was 2017 top, which was almost 20,000, right? Outside of the channel, right? And it's that standard deviation, right? Away from, you know, where the center of um this channel is, right? When we get too far away, you know, it naturally it just gravitates back in, right? Especially in a very bullish scenario, right? And we don't, I mean, think about it on the flip side. It's not like we have the opposite happening, right? That would be a bit strange, right? I mean, it is bullish. Things are bullish when they operate above lines, right? So even when we put in, you know, our indicators, right? I mean, things operate above the line, and that's bullish, right? And that's the case for Bitcoin, right? Is that, you know, adoption's increasing, and, you know, therefore price should increase also, right? Over the long term. So right in 2017, we fell into the channel, really lost the momentum, and then we had an absolute fall out of the channel. And but even if you bought inside the channel, you still had an opportunity to sell at a high. So though, you know, holding, you know, let's say you bought here from June 2018 to April 2019, you still had, now you had some tough times here where you had to buckle in, but no matter what, you were able to sell at a profit if you were able to hold. Um, and then of course we have the COVID dip, which is a bit unexpected, but it was trading in the channel. We made a jump out of the channel for a minute, a couple weeks, but didn't last, didn't stick. But nonetheless, we got out of the channel and we went for another run, right? And that was one of the biggest runs, right? 600% there. Obviously not as great as this run from into 2017, but nonetheless, when bought in the channel, eventually you're able to sell at a profit. So that brings us to today, where we are trading in the channel. And like we said, like we want to point out that everything always wants to gravitate back to the standard, um, I don't know the word for it, but you know, the standard momentum, right? We can't just go straight up. It doesn't work like that, right? once it gets too far, 1, 2, 3, right? I mean, 1, 2, 3. It always wants to gravitate back. Right, every time, 1, 2, 3, 1, 2, 3. You know, the only time we go straight up is when the prices were really cheap, right? So there we go. There's our Gaussian channel, and you can look that up, right? GC, Gaussian. You type in indicator, just type in Gaussian. Gaussian channel. And next, I just want to throw up the logarithmic growth curves. So when we hear these numbers, like, let's get these out of here. Actually, no, leave them there. These will come in handy. We talk about something else. So when you hear these numbers, like, oh, Bitcoin's gonna be $1 million. This is where people get those numbers, right? And these are from these exponential growth curves. Based on how it's traded so far, where we can, assume with adoption, continued adoption, future price, right? I think it's called Metcalfe's law, Metcalfe's rule. Let's see if I'm right. Yeah, Metcalfe's rule. Of the popular ideas of the internet boom, one of the most dangerously influential was Metcalfe's law. Simply put, it says that the value of a communications network is proportional to the square of the number of its users. So, users go up, number goes up. It's funny they compare it to the internet boom, but I mean, that's what it is. This is Web 3.0, 4.0, whatever you want to call it. I mean, it is what it is, right? So, if all these things hold true, this is where these people get these random numbers. And you can see, right, the 100,000, what was it, the 100,000 by 100,000 by 2022. I mean, there it is, 97,000. And I'm sure this is adjusted somewhat. But, sorry, August, September. Yeah, no, I mean, it hasn't. No, it was 140,000. For December 20th, 135,000. Right? So that's where those numbers are from. But you can see where people get them now. They're not just random numbers. Right? If we take this channel, for instance, gotta get good with these things. With this. All right. So there's our Gaussian channel, and this is our logarithmic growth curve. Now, another one I like is it just in the indicators you type in this one. This is the logarithmic curve zones. So you can see they put some colors in there, our red, our yellow, and our green. And we can see that in all our peaks, in all of our all-time highs. Let's go to, sorry, I'm jumping around, sorry. In all of our all-time highs, 2011 all-time high, we traded in the red, and it went all the way back, right down back to the green. In 2013 all-time high, ripped through both three, all the way back down to the green. And this is when you use both indicators, logarithmic growth curve and the Gaussian channel. This starts to make more sense here, right? This traded way below the channel, but when we bring in the logarithmic growth curve, it looks a little better, right? It looks like, all right, that was buy zone, right? That green area. Trading outside of it, which was all buy zone, right? New all-time high in the red, top of the line, all the way back down to the bottom. So this is taking all the highs and the lows and the highs and the lows, and it creates this logarithmic growth curve. So once again, here we dip way below, way out of the Gaussian channel, but we're in buy zone. So now we get to where we're at now, and we never got into the red area this time. But we're trading in both Gaussian channel and the green and in our green buy zone of our logarithmic growth curve. Now, you can see where it says, even if we're at the bottom of that curve or somewhere in here, it's pretty fair to say, without some spectacular event of sorts, similar to maybe the opposite of a COVID event, right? This is our COVID event. I would assume we trade somewhere in this area, right? Now, where is that? Well, that's the high 20s, into the 50s, the low 50s. So we have that, and even the bottom expectations for 2024, if trading still inside the logarithmic growth curve, we're looking at 100,000 Bitcoin by 2024 January, so literally 2 years later from now. So, and I mean, if we look back, we can see that when we bought while in the Gaussian channel, we were successfully able to sell it at a higher price later. So, what else? Well, there's another logarithmic growth curve. I just found I've seen other people chart them. And sometimes, it's tricky to find stuff in the indicators. And sometimes there's several types of one indicator, and it's a matter of just going through all of them to see which one you like, or what have you. The other thing I just wanted to throw out was the 200 week. Right, the 200 week's a great indicator of bottoms. Only time we've ever traded below the 200 week is in the COVID collapse. We touched it on December of 2018. We are a little more than halfway there. If we were going to meet it somewhere here, or I don't know, tomorrow, and it was at 20,000, which is, let's draw a line across. If we coincide it with the all-time high of 2017, 21,000. So we could see where the 200 week moving average and all-time high. That's great support. You can see that's a good area. What else was I gonna say? All right, here I brought up total2, and total2 is the entire crypto market cap, excluding the market cap of Bitcoin. That's total2. Total1 is the opposite. Total1 has everything. So total1 includes Bitcoin and every other coin. So if we look at the weekly on the Gaussian channel, it's very similar to the Bitcoin one, but we've only ever had we don't have as much history, right? Because of the altcoin markets. That's like when you go back to Bitcoin dominance, right? I mean, you can't even get a chart here, right? It doesn't even make sense. Let's just turn all this off. So. Actually, you know what? No. So this is Bitcoin. This is perfect example. This is Bitcoin because Bitcoin was all that existed. And then the advent of other coins came out. So you can see that the Gaussian channel says that Bitcoin will never, at this point, you know, it's trading under, it's trading below the Gaussian channel constantly, where it's trading, the opposite to the way that Bitcoin trades, right? It's trading below the channel. When it comes above, it's gonna go back below. So, you know, now stay with me here. So if we're looking at total two, on total two, it's bullish, right? We trade above the channel for some period of time. We trade back in the channel and under the channel, but we ultimately can trade above the channel. Now, one thing to point out that the majority of total two is the market cap of Ether. Now, in the last 3 years, we have had, maybe not even three, I would say two, maybe even one. We have, we do have some other altcoins that are taking away the market, and that's why these Bitcoin dominance may never, Bitcoin can trade at a much higher price, but the dominance of it, you know, we may never see levels that we saw before because we know that coins are here to stay, but we don't know which ones, right? So I just thought I'd point that out. This is the 2017, 18, well, 17, 18, right? It coincided with the new year. 17, 18 into the channel. Um, now this just represents all altcoins, right? So mostly, which is Ether, but I mean, so it doesn't mean you can buy any altcoin and just hold it. I mean, they can die, right? So I just want to point out, if we compare the Gaussian channel now, what we're seeing on total two, to what we saw with Bitcoin, where Bitcoin was trading down inside of it, right? On the bottom of it, there's Bitcoin, and total two trading at the top of it right now. So that means we can assume that Bitcoin's leading, and it always leads, right? So if we are to see, I think if we were to see the alt market rally hard again, it's going to take place after a sizable Bitcoin rally, because Bitcoin is leading, in my opinion. The alts are lagging, right? There are moments when it switches, and that happens, right? And the same thing with the S&P, right? I mean, the S&P right now is Bitcoin's running it, or excuse me, S&P runs the Bitcoin at the moment, in my opinion. If the S&P dumps tonight, then you can bet your bottom dollar that Bitcoin will dump. I mean, that's just my opinion, though, right? But I think it's good to point out. And then in tough financial times, I mean, everything goes down, right? There's nothing you can do about it, right? I've actually never looked at I've never pulled the Gaussian channel out on the S&P. I'm sure it looks absolutely spectacular. I mean, maybe stocks, maybe that makes more sense to you, right? I mean, clearly, just because the entire, the S&P 500 is going up, doesn't mean every stock that trades goes up, right? There's outliers inside here that go to nothing, and there's stuff that keeps going up and up and up, right? But as an indicator, the Gaussian channel shows us when we buy in here, we're able to sell at a higher price. When we buy in here, we're able to sell at a higher price, and so forth and so forth. So let's not jump the gun. Let's just wait. At the moment, we're touching the Gaussian. We touched the top of the channel, so we will see. And this is specifically for Bitcoin, so I don't even know if you can use it. Yeah, it doesn't work. So cool stuff. Last one. Let's look at gold. See what gold does when you put a Gaussian channel on it. Wow. No, I drew that triangle in there recently. Now, gold's got a much longer history. Yikes. This is on a monthly. This is, what's the point of even playing with this thing? But nonetheless, when you bought in the Gaussian channel, up till, I mean, you're watching it leave at 1360 in 2019. You were able to trade. You were able to sell it for more than you bought it for. I mean, it's early 2000s. I mean, could have bought for upwards of 300. Even selling it once upon re-entering the channel, 1,000 for 400%. Anyways, we're just trying to point. I really like this indicator, and I think it's great for Bitcoin. All right, hope you liked it. Gaussian channel. Yeah, we got our Gaussian channel. Remember, just type in Gaussian, Gaussian, and play with those. And we got our logarithmic growth curves. Logarithmic. So yeah, you can play with some of these there, whatever they are. I don't know, some Fibonacci retraces. All right, so there we go. All you gotta do is wait sometimes. That's what we'll be doing.